Okay, hi everyone. Thank you for joining us today. First of all, congratulations on getting here. Graduating is a fantastic achievement, and I'm certainly sure it's well deserved for all of you. My name is Julie Berthium, and I am a senior insurance advisor with CDSPI. And joining me today is my colleague, Matthew Wright, who is an investment planning advisor. Okay, so for the next 30 minutes or so, we're going to help answer some of the 5 most popular financial questions that we get from graduating dental students. How do you get malpractice? What happens to your CDSPI student insurance? How to pay off debt and save? When should you incorporate? And what happens to your student line of credit? Now, if you have any questions at all, please put them in the chat and address them to the organizer, and we will get to them at the end of today's session. Now, just to entice you a little bit more, if you stay all the way through to the end of the webinar, we will email you a $5 Tim Hortons gift card in the next 48 hours to your email that you registered with. Now, obviously, everybody's situation is unique and different and requires personalized, individualized advice. So we do encourage all of you to schedule some time with Matt or myself to help you get started on your career. But hopefully tonight we can provide you with some general direction as to where to go. So you were invited here tonight because you are a CDSPI client, but you might not know fully who we are and what we're about. So let's just look a little bit about what we do and what we represent. So first of all, no other organization in Canada has been focused exclusively on the needs of dental professionals longer than CDSPI has. As a not-for-profit organization, we have been serving the dental community since 1959, and therefore we have developed a very unique and deep knowledge and understanding of the risks and scenarios that you will face throughout your lives, and we have come to know dentists very well. Secondly, we provide dentists with unbiased advice, always focusing on what is best for you. This is because all the advisors at CDSPI, including Matt and myself, we work on salary, not commission. And this is rather unique in the industry, but it gives us the sole advantage of being able to be unbiased. You know, whether you sign up for products with us or not does not affect our paycheck. So we're really here just to be accountable to you, help you get what you need, and provide comprehensive, stress-free experience to help you throughout your paths. Thirdly, we are a not-for-profit organization. So we don't have any shareholders to answer to, but rather we answer to you and the dental community. We also have exclusive access to a variety of services. On behalf of dentists, we have established several strategic partnerships with leading financial firms to better broaden and provide coverage and solutions to you. So we offer leading insurance and investment solutions tailored specifically to your needs. And lastly, we are governed by the dental associations and driven by your interests. CDSPI is sponsored by the CDA and the participating provincial and territorial dental associations. Now, just to start out with, before we get into the questions, I wanted to bring to your notice a website, dentalcareeroptions.ca. Now, this is a website that CDSPI developed in collaboration with the CDA and the provincial dental associations, specifically for Canadian dental students who are transitioning into practice and about to become dentists. Now, on this site, you'll find all kinds of information about associateships, corporate and group practice associateships, choosing a residency program, choosing a specialty, owning a practice, and a lot more. So when you have a moment, you know, take a few minutes and go and visit that. There's a wealth of information there to help you get started. So let's get to those 5 questions. First of all, malpractice and how do you get it? That's probably the top of mind question right now for most of you as you transition into practice. Now, when you become licensed as a dentist, you will be legally responsible for the services that you and your staff perform. You could be accused of malpractice and have to bear the significant financial consequences that. Even if you're innocent, you're still going to want to defend yourself, and that can add up to very large legal fees. Malpractice insurance is designed not only to protect you, but also your corporation in the event that a patient sues you. It also will pay for the legal representation in defending you. Because no matter how careful we are and how fantastic of a dentist you are, we're all human, and sometimes accidents do happen. So how do you get malpractice insurance? Well, there's two things I'm going to talk about here. So first of all, out in Alberta or Ontario, your situation is a little bit different because you do get coverage through your license and the association for $2 million. That's for Alberta and Ontario. Now, if you wished to have more than 2 million, CDSPI does offer an excess malpractice insurance so that you can purchase additional coverage if you are comfortable with a higher amount. Now, outside of Alberta and Ontario, CDSPI is the primary provider for malpractice. So the way that it works is that your malpractice and your license go hand in hand. You can't have one without the other. So you do need to apply for both of them at the same time. When we get your application, we will contact the licensing body to let them know we have it and to ask them what date they expect to activate your license so that we can activate the insurance as of the same day they activate the license. Now, something to keep in mind is that if you are not going to start practicing right away, maybe you're going to go tour Europe for the summer or whatever else it might be, then maybe don't rush to get licensed right away. Because the moment you get licensed, you need to get and pay for malpractice insurance, regardless of whether you are working yet or not. So do keep that in mind. Through CDSPI, we do offer anywhere from 3, 4, 5, 10, and 25 million in coverage. And once you do, if and when you do incorporate down the road, please do let us know, as we need to insure the corporation to make sure that it is also protected under the policy. Now, often I get asked, how much malpractice should I have? Well, there's no exact science to that, but CDSPI is going to, even the minimum 3 million that we offer is going to be sufficient for licensing requirements. So whether you choose a higher amount is ultimately what you are comfortable with. Now, there are certain factors you should take into consideration. For example, if you are a specialist, or if you do a lot of surgery or IV sedation, or if you work with a lot of children, that certainly increases the day-to-day risk that you face, and you may very well want to choose a higher amount of coverage. You have to kind of think of what is the worst case scenario, and that could be death or permanent paralysis of a patient. Now, certainly that does not happen every day, but if it does, it could be catastrophic, and it takes only one claim like that to possibly ruin the rest of your career. So just ask yourself, how much is your peace of mind worth? And whatever amount of coverage you choose, you are not locked into that forever. You can change up and down throughout your career as you see fit. Now, just to backtrack slightly there, I know I said 3 million is sufficient to satisfy the licensing requirements. That's with the exception of PEI. Just a couple months ago, PEI changed their minimum requirement to 5 million, but everywhere else, yes, the 3 million is sufficient if that's how you wish to go. And also keeping in mind, malpractice insurance, whether you treat one patient every month for the rest of their life, or you treat that patient just once because the primary dentist is away on vacation and you are seeing them in an emergency situation. The moment that patient sits in your chair, they are your patient, and you share in the risk of a malpractice lawsuit, whether you see them once or hundreds of times. So do treat them that way. And I can't stress enough, keep accurate and clear charts. If it comes down to it and there's a lawsuit, it's your word against theirs, so your charts are key in your defense. Make sure you document everything in clear, legible writing, or type it out if your writing is not so great. Make sure it's detailed and very, very clear. And don't ever alter or scratch out or anything like that in your charts. But if something does go wrong, something has happened, the patient's not happy, something wrong has happened, call us first. CDSPI is your ally, and we're here to help you when those issues arise. So if you suspect something, call us. We'll have an adjuster assigned to you, and the adjuster can tell you what to do, what not to do, what information we need. But above all, do not negotiate with the patient. Do not offer compensation or a refund or free work, because that could really make it more difficult to defend you down the road should it get to that point, because it can look like an admission of guilt. So please call us first, make sure all the charts and everything are up to date, and we'll take it from there. As I said, all settlements, legal fees, approved witness expert statements, those are all covered by your malpractice insurance. And if you want to find out more information, we have created a microsite on our website full of all kinds of resources in one place. You just have to visit cdspi.com/insurance/malpractice. Question number 2, what happens to your CDSPI no-cost student insurance? All of you do have that. That is why you are here tonight, but you're no longer going to be in students. So what happens now that you're graduating, and what can you expect in the coming months? So all of you have seen a CDSPI presentation at some point in your last 4 years. And if you recall, there were 2 packages of insurance that we offered to you. So there was one that did not require a medical. That was called the undergraduate package. So for those who did that, then as of your graduation date, we have automatically upgraded you to the double up package. So that second column there, 200,000, 200,000, 2,000. You should be getting confirmation of that in the mail very soon. Now, for those who did the medical package, then as of your graduation date, you have instead been upgraded to the optional graduate plan. So that third column there. Now, for those who only did the non-medical plan, there is still time to upgrade to the optional graduate plan. You have until December 31st of this year to do so. If you are interested, please don't wait until December because your health can change at any time and you might not be able to pass the insurance medical anymore. Also to point out, the optional graduate plan, it not only comes with higher amounts of coverage, but better features, particularly in the disability plan. The optional has a 30-day waiting period, where the double up only has a 90-day, and the optional also includes that future insurance guarantee. And you are going to need even more coverage than what comes with the optional plan. So I do encourage everyone to upgrade to that. $3,500 doesn't go very far as a dentist. So why not get the most that you can at the discounted rates? Now, no matter whether you end up with the double up or the optional graduate plan, both of them are going to receive a new graduate discount. So they are going to be at no cost until the end of this year. Starting in January 2024, the life and accident insurances will be half price for 3 years, and the disability will receive a lifetime 15% discount. Now remember, insurance is not a stagnant thing. It is something that does need to be reviewed constantly throughout your life and career. So I would encourage that at least once a year, you call us to review, make sure you still have the right coverage, the right features, the right beneficiaries, the right amounts. And in addition to that, anytime there's a major milestone in your career, so you start working, your income goes up, you buy a practice, you start a family, retirement, these are all major milestones that should prompt you to call us to review your portfolio. So you don't have to be the expert in it. Just give us a call once a year and at every major milestone, and we'll keep everything up to date for you. So let's talk about the insurances that do come with your package that you have signed up for as a student. So first of all, disability. And this may be, aside from malpractice, the most important one and the one you may need your whole career. After all, your ability to earn an income is your greatest financial asset. After all, a dentist is not considered an employee, but rather you are a self-employed individual, which means if you become disabled, you cannot claim a disability benefit through the government. You do need to have your own disability insurance. So it's very important to have that. General rule of thumb is take out the most disability insurance that your income allows while you're young, because at this point in life, you likely don't have a nest egg to fall back upon should something happen. Of course, we can review this down the road when you have established some sort of nest egg and maybe you don't need quite as much disability at that time. But really, the point of disability insurance is to pay you a monthly benefit to replace your income because you cannot work due to illness or injury. Under our plan, that benefit, once you have satisfied your elimination period, is going to be payable until the earlier of recovery or age 65. Okay. And I know you might think nothing's going to happen to you now, but it's a lot easier to get insurance when you are younger and lock in that rate at a younger age. So don't wait until it's too late, because then you may not be able to. And the amount that you came with your student package, that's just the stepping stone. You are going to need far more than that. So like I said, you either have 2,000 or 3,500 right now, depending which package you chose. But our plan does offer up to 25,000 a month. So there's lots of room to grow there. Okay, so let's look at our disability plans compared with a popular plan outside of CDSPI. So here you've got our double up plan, the 2,000. You've got our optional graduate plan at 3,500, and you've got the Canada Life or Manulife ProGuard plan. Now you can see there are some differences. So first of all, we look at elimination period. I know a lot of the time when other brokers target you, they are automatically defaulting to giving you a 90-day elimination period. But as you can see under our optional graduate plan, it's 30 days. That means that if you become disabled, the benefit starts to pay out to you on day 31 of disability rather than day 91. And when you don't have that nest egg yet, you may very well need that disability insurance to kick in a lot sooner. However, if you are financially comfortable with a longer elimination period, you absolutely can change it to either 60 or 90 days, and that will decrease the premium. With our plan, own occupation is automatically included at no extra charge. Outside of CDSPI, generally it is available, but it's something you need to add and pay for. The cost of living adjustment rider is in both of our packages, but the future insurance guarantee is only in our optional graduate plan. Now you can see our plan is very competitive with the outside market, but if you are shopping around, please make sure you compare apples to apples. Don't just look at the premium. And if you ever do have a question about your CDSPI plan, please ask a CDSPI advisor, because our disability guard plan is specific to CDSPI. No other broker has access to it, so they may not fully understand all the nuances or features of it. So please talk to a CDSPI advisor if you have questions about your CDSPI plan. Okay, so if we move on here, I just want to point out some of the features of our disability guard plan, because I know in the out there in the field, in the community, there is still some misconceptions about it. And this is because this plan, we only introduced it in 2017, and it is very different than the disability plan that we had previously. So first of all, our disability guard plan is a guaranteed non-cancelable policy. The only way it can be canceled is if you cancel it or you don't pay the premium. CDSPI cannot cancel it, even if we went out of business, which we're not, but even if, the policy is guaranteed to be taken over. So you can rest assured that you have that peace of mind. There are two types of premium structures within the plan, step or level. Your policy has defaulted to a step premium, which means the premiums do go up every 5 years, but at a guaranteed rate, though there is a window of time after graduation where you can switch to a level premium. A level premium starts a little higher than STEP, but it does not increase with age. So even when you'd be 65 years old, you'd still be paying as if you are today's age. I do encourage everybody to switch to level. You're all still younger. It is better in the grand scheme of things. Own occupation is automatically included. So is HIV and hepatitis protection included at no extra cost. The cost of living is included in both of our plans, but the future insurance is only included in the medically underwritten optional plan. Okay, if you are comparing premiums, like I said, make sure it's apples to apples. Don't just look at the cost. I said previously that our optional plan has a 30-day elimination, but to make sure I am comparing apples to apples, I did switch it to 90 days for the purpose of this quote. And you can see there, this is based on a 28-year-old female and a 28-year-old male. And this includes the lifetime new grad 15% discount. You can see that our cost, when I do change the elimination period, does come out cheaper than others. So if you have any questions, please let us know, okay? Okay, next I want to, actually just one other thing I want to talk about with the disability before I move on. We do not have a coordination of benefits clause. Now I've been with CDSPI for almost 18 years, and I have never seen another policy that does not have this clause. So what it means is that if you become disabled, as long as it's a full-time disability, we do not ask for proof of income at the time of claim, and we do not take into consideration any other policies that you may have elsewhere. You simply get the amount of coverage you have pending proof of medical disability. This is going to make your claims process so much easier. So that is a huge selling feature. Okay, moving on to office insurance. Now, I assume most of you are going to start out as associates, and often there's a misconception with associates that they think because they don't own the practice that they don't need office insurance, and that is not true. Just remember with the disability, you are not an employee of the practice as an associate. You are a self-employed individual, which means if something happens to the practice, like fire, flood, vandalism, and it has to close for repairs, you have no income during that closure unless you have your own plan. Now we do offer, so Triple Guard is our office insurance plan. We do offer an associate version of it. It's going to give you up to $50,000 for any contents that you do own in the practice. It's going to give you practice interruption to cover your missing income if something happens to the practice and it closes for repairs. And it's going to give you commercial general liability. Now, the regular annual cost on this plan is about $685 a year. If you activate it before December 31st of this year, then it will be at no cost until the end of this year and half price for the next 3 years. So think about that. That's $342 a month starting next year. How long would it take you to lose $342 in income? Probably not very long. So I think it's well worth protecting your income. Now, I know I've by all means not covered all of the insurance questions that you may have. Everybody's situation is different. So please, again, put any questions in the chat if you do. And for now, I want to pass it off to Matt to address the investment questions. Matt?
Thank you, Julie, and hello, everybody. As Julie mentioned, I'm on the financial planning side of things, and I wanted to address some of the questions that I often get with new grads. So I would say the most frequent question that I tend to get is how much should I put towards debt and investments and how to find the right balance between the two. So the next couple slides will kind of look at that. Next slide, please. For individuals, debt can be overwhelming, and it's tough figuring out how much to pay. It's not an easy job to figure out how much to pay and put towards it. Everyone's different, and everyone's comfort level with debt is different. So paying down debt should be a priority, but it's not the only one. You have other financial goals and obligations in life. If you wait until debt is paid off and then start to invest, you could be 45 by that time. So this is kind of where CDSPI advisor can help you evaluate different scenarios and help map this out for you. Of course, this is at no cost to you. So this slide here illustrates an example of paying off, say, $250,000 worth of debt in either 5 or 10 years. So as you can see, the monthly payments as well as the total interest cost is very different from one another. So you kind of have to find that sweet spot and what's best for your cash flow. If you'd like to play around with this tool, I mean, obviously nothing's set in stone, in terms of how long you pay off this loan. So feel free to pull up debt calculators. This one here is from www.debt.ca. So you just go in there and plug in whatever variables you like. Next slide, please. So you may have come across this acronym before in your studies. It's not just meant for debt repayment, but when you are creating a plan for yourself, make it a SMART goal and map it out on, say a piece of paper. Let's take that 5-year example we just went over. So say this 5-year plan is best for you. This is kind of what your SMART goal would look like. Now the S stands for specific. So that specific goal is pay off the line of credit, which is the $250,000. M is for measurable, and how you measure that is the line of credit gets down to nothing, so a zero balance. Now for achievable, as you saw before, it would cost about $4,800 a month to make this goal happen. So that's how that's the achievable part of it. Now, realistic, you need to have the income to support this type of payment. So say you were earning about $175,000 a year. This would leave about $9,300 per month net for all expenses. And that's where, I guess the achievable part kind of ties into it. It needs to work with what your overall income is. And then lastly, the T in the SMART goal is timely, and that is the 5 years that we just discussed. Next slide, please. So we touched on debt. Now let's bring investing into the mix. Compound interest is a powerful tool for increasing your wealth. Basically, the earlier you start, the longer your savings will have to grow. Let's take a look at a scenario here. So we have Owen. He gets a late start when it comes to investing. He starts investing $2,000 a month from age 45 to age 65. Now we have Gabriella. She's a bit more ambitious and still invests the $2,000 a month, but she starts 10 years earlier, age 35, and stops 10 years sooner. So goes from 35 to 55. Now they both invested the same amount, which is $480,000 over the course of that 20 years. However, Gabriella ends up with $720,000 more in her account by the time she's 65. What that means is just Gabriella's savings have had a longer period of time to compound. In other words, her interest has earned more interest in that time period. So again, it just goes back to the saying, the earlier you start, the more savings you'll have later on. Next slide, please. So when it comes to investing, there are various accounts that you can choose from, and I would recommend discussing this with a CDSPI advisor or another advisor. But I want to touch on this new account that was just introduced, specifically for first-time homebuyers. It's a new account that was introduced earlier this year, and it's called the First Home Savings Account, or FHSA for short. It's basically a hybrid between an RSP and a TFSA, where funds grow on a tax-free basis, but also provides you a tax deduction. So there's some great perks to this account. And again, this will be targeted if you plan on purchasing your first home in the near future. Now, Canadian residents over the age of 18 can save up to $40,000 in this account to put towards that new home. There are some more rules to this that go along with the account. Again, you have to be a first-time home buyer with a couple other things. So if you think you're eligible and you want to utilize this account, again, speak with your advisor and we can go more into detail with this. CDSPI will be offering this account. We're targeting the fall, so later on this year. Next slide, please. So that leads us to our next question. When should I incorporate? Next slide. So incorporation is the process of creating a separate legal entity that essentially becomes the owner of your practice, and then you become the shareholder. So incorporating is a great way to manage your income stream and benefit from growing your assets on a tax-deferred basis, because the tax rates are lower in a corporation. Now, many self-employed dentists do opt to incorporate at some point in their career, but when to do so is always the question. So if you can answer these 5 questions on the slide, it'll help you give a good idea of whether you'd benefit from this or not. Now, some reasons not to incorporate would be if your income isn't high enough, because you do want to have that surplus. You're not spending everything you're earning to capitalize on the tax-deferred benefit. And then lastly, there are additional accounting and legal fees that go along with incorporating. So you do have to factor that in. Next slide. So the next question is, what happens to my line of credit after graduation? You can stay on this slide here. So there are different types of lines of credit, whether it's student, personal, professional. They all have different conditions, grace periods and rates, depending on what it's being used for. So at different points in your career, you'll be using your line of credit in different ways, and it's important that the terms and conditions of your financing are in line with them. So here's what you need to know when graduating. So when you're in dental school, principal payments were not required, but after graduating, your student line of credit will convert to a professional line of credit, and then eventually you have to start paying back that principal and interest. However, depending on the lender's rules, you may be able to delay the repayments for a certain time period. So that's called the grace period. For example, if we look at the Scotia Professional Student Line of Credit, it offers a 24-month grace period, which is a nice little perk. But again, check with your lender to see what the grace period is. So during that grace period, you may or may not be required to make interest payments. Again, it varies. If you don't make any interest payments, interest will continue to accrue on that amount. So keep that in mind. It's a nice benefit not to pay, but interest will, again, it'll accrue. If cash flow allows it and you're able to make those payments during the grace period, it's always a good idea to put that towards the principal, because that brings down the overall interest cost. Again, I would suggest speaking with a CDSPI advisor, and we can help map this out for you. Then lastly, if you need to bridge your income between, say, graduation and the time you start practicing, and you have available funds left in your line of credit, you can draw on these to sustain your lifestyle. And then as your grace period comes to an end, you have the option of converting to a business line of credit, and then that could carry on your business related expenses. We touched on Scotia. If you're with Scotiabank, you'll enjoy competitive rates no matter what the lending product is. So if you need information on this, just please let us know and we can put you in touch with them. Next slide. You are graduating to do what you studied so hard to do. It's an exciting time, and there are many decisions to be made. As we mentioned, we are a not-for-profit organization, and we can provide you with stress-free expert advice and best-in-class insurance and investment solutions, again, tailored specifically to your needs. We only deal with dentists. Now, there are a lot of options out there. Everyone's situation is different. CDSPI is here for you, so we can help you with this. I'd say book a meeting with us, have a conversation. You can scan the QR code on the screen. It would be nice to meet with all of you either before or shortly after graduation. We can help set you up for success and ensure you're aware of all your insurance options and discounts going forward. Again, CDSPI, there's no cost, no obligations. We're here to help you. And again, we only work for dentists. Next slide, please. CDSPI is a one-stop shop for students, associates, practice owners, their spouses, their children. So we cater to all those folks. CDSPI and our partners provide expert advice for the dental community, whether it's, again, insurance, investments, banking, estate and tax planning advice, or wellness. We can assist you with all this, so don't hesitate to reach out and let us point you in the right direction. Some examples of some services you may need in the future is, say, a complimentary financial plan from somebody like myself, where we can lay out, a debt repayment strategy. Whether it's insurance, we can, offer you preferred pricing on things like travel or home and auto insurance, as well as professional insurance like office overhead. Whether it's accounting, our partners at MNP can offer 20% discount on incorporation planning and appraisal review when purchasing a practice. So that's a nice big discount. And then our partners at Scotiabank offer discounted banking products and special financing rates. And then finally, MAP can provide you complimentary and confidential counseling, other things like nutritional and legal advice for you, your family, and your staff. Again, there's a lot just thrown at you there. We'll send you a link with all this material in the follow-up email. So just look out for that in a couple of days. Or again, just reach out to one of us and we can, again, point you in the right direction. Next slide. So as we get to the end here, it would mean a lot to us if you left us some feedback regarding, this presentation, or maybe some suggestions on future materials. So again, feel free to scan the QR code and leave your thoughts. You'll be entered into a draw. So again, it just helps us out for planning these sessions. Next. So before we take some questions, just want to take a minute and make you aware of our Instagram, Facebook, LinkedIn, and Twitter accounts. On these platforms, you'll find the most up-to-date information, whether it's articles, learning tools, interesting posts catered to the dental community, and other various materials. So feel free to check that out when you have some time. And then lastly, this leads us into the Q&A. So if you want to ask a question, again, feel free to put that into the chat box. There's none at the moment, but again, we can take a couple minutes. If there's questions, feel free to type it. If not, reach out to us directly, and we're happy to take it up offline.
Okay, actually, Matt, I do have one question that was sent to me. So I'll read it out loud so everybody can know it. So it says, for those planning to work in Alberta and don't want additional malpractice through CDSPI, should the bare minimum be to apply for the no-cost optional graduate package? Okay, so the optional graduate package does not include malpractice. That is something separate. So if you are in Alberta and you are comfortable with just the $2 million that the ADA&C is going to offer you, then that's fine. If you do want additional coverage, it's very, very affordable. I think the extra $1 million is something like $70 a year. The optional graduate package, that I absolutely do recommend that everybody get it, because you are going to need those higher amounts of coverage. So like I said, the optional package comes with $3,500 in disability. That's only equal to about a $70,000 income. You're all going to make way more than $70,000. So get the most you can at the discounted rate. Even the $500,000 life insurance. Think about how much student debt you probably graduated with. And then if you want to buy a practice or have a family, you are going to need additional life insurance. So get the most you can at the discounted rate. When it comes to disability, I know sometimes a lot of you are eager to increase it beyond the $3,500. You need to have at least 6 months proof of income in order to increase it beyond that amount. So I hope that answers the question. If not, please send me another message. Anyone else?
Not at the moment. Nothing popped up.
Okay, well, like I said, I'll just move back on this slide here so that if you want to write down our contact information for both Matthew and myself, it is right there. Please feel free to reach out to us at any time. Our information is also on the website if you don't have a chance to write this down. But I guess if there are no more questions between Matthew and myself, we'd like to say thank you very much for attending. Good luck as you get started on this. We wish you nothing but the best of success. And we hope this is just the beginning in a lifelong relationship with CDSPI and yourselves. So thank you, everybody.
Thanks, everyone.